Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical support and demand area. In fact, from here, what we can notice is that all these previous rejections to the upside have been created. Every time that the market tested this zone, it got rejected to the upside quite aggressively. And what we can notice at the moment is that the market is testing this exact same zone, has already started rejecting it to the upside. So in a situation like this, we could definitely expect more potential bullish price action being created away from this area. So the monthly time frame does seem quite bullish. We can also notice from a pattern standpoint that we just had the creation of a very strong impulse to the upside followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And this shows us how we have the 0.618 and 0.786 Fibonacci retracements. So essentially this area here, which is lining up exactly with that historical support and demand area, but also with this previous level here of support and demand from which this rejection to the upside was created. And if we look closely, we can see that we kind of have the creation here of an inverted head and shoulders with the left shoulder here, the head here, and the right shoulder here. Now, when you have a confluence of support zones, so you have multiple layers of support lining up in the same area of price like we have here. So we have horizontal support and the Fibonacci levels in the same area of price. That increases the probabilities of seeing institutional longing inside of that zone. And we will be speaking about institutional longing in just a few minutes when we move to the commitment of traders. But for now, let's keep in mind that the market is rejecting strong confluence of support and historical support. And let's drop down on the weekly time frame. Now, from a weekly standpoint, we can notice how the market has just established an uptrend here on the weekly time frame. In fact, we shifted now from creating lower lows and lower highs to now creating higher highs and higher lows, which by definition is what an uptrend is. An uptrend is a series of higher highs and higher lows, which is exactly what we're getting right now with the creation just now of a new high, so higher essentially than the previous one. We can also notice that if we have to identify the structure, all this zone is previous weekly resistance from which these previous rejections to the downside have been created. And now the market has broken above the zone. So all this previous resistance is now turned support at this level. So there is a possibility first for a retest and then for a rejection to the upside away from this level. Dropping down on the daily time frame, what do we see? Now here on the daily, this is where things start getting quite interesting. In fact, I also spoke about EURUSD just a few days ago when the market was here, and I explained all the reasons for which we could expect a correction. And then from here, the continuation to the upside, which is in fact exactly what the market just gave us. And by the way, I will link in the description that previous analysis, so you can go and check it out for more free education. However, at the moment, what do we have and what kind of structure the market has been creating? Now, before we dig deeper into what we have here from a technical perspective on the daily, first, let's go and see what we have when when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing. Now, if we look at the data for the euro, the first thing that we have to keep in mind is that the euro is actually already EURUSD, because all currencies on the spot are traded against the USD. So this is already the institutional data of the non-commercials for EURUSD. And what we can see is that with the last reports, net positions have been massively increased. In fact, we went from having a situation where we had a negative net positioning from an institutional perspective with minus 9.5k net positions, so essentially more shorts than longs, 173k shorts compared to only 164k longs, all the way up to now having a positive net positioning, so more longs than shorts from an institutional perspective, so completely the opposite, with 182k longs compared to only 155k shorts from an institutional perspective. So essentially, institutions have been increasing their longs and decreasing their shorts for EURUSD, going from 164k longs to 182k longs, and shorts getting decreased from 175k shorts to 155k shorts. So clearly, institutions have been moving back to the bullish side for EURUSD, anticipating a rejection away from the historical support that we have previously identified at the beginning of the video when we were looking at the monthly time frame. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you'll find both on the screen and also linked in description, so you never miss new updates. Now, back to the analysis. Well, from a daily perspective, we have to identify the fact that at the moment the market has resistance at this zone. This is the area from which this previous move to the downside was created, and also this one. Now, we don't know if the market will manage to successfully break above this level. At the moment, the market is trying to break, but we still don't know if it will be successful in breaking above. But if it does break above this level, that is where things get interesting, because at that point, this previous resistance will become support. So if we do get the break on the retest of the previous resistance turn support, this is where there is good probability of seeing more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. So if we get this break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so for hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside away from this area, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire all-inclusive mentorship program. This is the most complete all-inclusive mentorship program. You will see here a complete presentation of everything included, which is essentially all my courses, including the programming course on automated algorithmic trading. You also have the possibility to gain access to one-on-one private mentoring, all included in the mentorship program, the trading station software with the Telegram signals notification, and also the COT data software, which is essentially the one that we just used in this analysis. So everything all for lifetime access. And if you continue to scroll down, you will see that you will have the possibility after the testimonials to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest at least to go and check it out at transparentfxtrading.com. You find the link also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.